everyone, this is Abhijit Chatterjee recording our session for Chartsarefun. This is on the Sunday, July 20th. We're recording this for the week of July 14th. Today we're going to show you where, the market is, of course, red hot. Tremendous amount of positive sentiment. There are many who are talking about a melt up across the board, buying everywhere. All the pundits interviewed on CNBC all are putting in projections of 7,000 and higher for S&Ps. Many are even looking for that target to be met this year. We're going to look at a hot sector, a lot in the news. Last week was what we know as the crypto week. Three key bills were passed, all positive for cryptos. So start off looking at Bitcoin. We'll look at what the near-term chart is saying, what the weekly and then the very long-term monthly chart on Bitcoin is saying. We'll also look at a key ETF in the alternative to Bitcoin, Ethereum. It's got a lot of attention with Tom Lee starting off a big investment in Ethereum with a company that is chairing called Bitmine. So we look at Ethereum, the ETF for that ETH. Then I'm going to come back and look at the market with what the 10-year yield. We know that the bond market is where smart money trades. We'll look at a chart of 10-year yield, TNX. We'll look at some of the sentiment indicators, CNN Fear and Greed Index. We'll look at some of the core market breadth indicators in the New York Stock Exchange and the S&P 500 are telling us. And after that analysis, we will end with the hot sector. There is an ETF that shows momentum in that hot sector called BUZZ. It's a VanEck ETF with all the positive buzz with investors piling in money like no tomorrow. And we look at the top three stocks or holdings in that BUZZ ETF, starting off with Rocket Lab, huge beneficiary of commercial and defense sector small to medium sized rocket launches. Rocket Lab followed with ASTS, AST Space Mobile, and then Palantir. Three big stocks have been tremendously parabolically moving higher. We'll look at what their charts are telling us. With that, we appreciate you subscribing to our blog. It's in Substack, chartsarefun.substack.com. If you subscribe to it with your email, you'll get the blogs as soon as it gets published, usually in the mornings. Those blogs are daily. And then our YouTube channel is Charts for Fun, youtube.com/chartsforfun. This is a weekly video that we post out over the weekends. Appreciate you subscribing to the video, to the channel, and then hitting the like button if you like the videos. Going into Bitcoin, as I said, we'll look at the short-term daily chart, drawing a trend line across the peaks from December into January, into more recent, into May, and then breaking out above it. This is carved out a beautiful inverse head and shoulder pattern. The left shoulder right here is from that 108 towards 90 up to 109. Then the head from 109 down to 74.4 on April 7th. From there, the completion of the head at 112K. This is a rising trend line of joining the highs. And then shallow pullback of the right shoulder from 112 to 98.3. Since then broke out towards first week of July after July 7th. And now it's been coasting higher. Key is, are we looking for a breather, a pullback to test this neckline, which right now is more towards 113K, or are we getting ready for a deeper pullback? We can see that the MACD histogram has started converging, but to the point that it is ready for a bearish cross. Is it going to bearish cross, or is it going to just test the center line and start climbing again? In the past, we've noticed that, like in the April into the May timeframe, the MACD histogram did prepare for a bearish cross. It did not. The black line, the signal line, tested the moving average line, the red line at the intersection, and then started climbing again. So that's where, it didn't quite roll over. It kept climbing higher highs. Are we in that similar phase? Because the measured target, by the way, on Bitcoin looking at that inverse head and shoulder, is from a 74,400 to 112,000. That's roughly, if you're talking about, say, 37,600. So if you take that 37,600 and add to the 112,000, that's 149,600. We round it up to 150,000. That's where Bitcoin is headed on this inverse head and shoulder pattern. So are we going to just pull back, maybe test the rising 50-day moving average around 109,000 and then from there climb higher? Or are we just going to continue climbing? MACD histogram is almost about to test the center line and then maybe it rebounds from here and starts climbing again. That's what we got to see. Now, if you look at Bitcoin's in this particular case, the weekly chart, what we are looking at on the weekly candle, this is the most recent week. So Bitcoin trades 24/7. It didn't end trading on Friday. It ends trading on a Sunday night. So today is starting at 8 p.m. 8 p.m. is when Greenwich Mean Time goes into midnight. And from there, it starts into the next week. So as of tonight, 8 p.m., we got to see if this pattern, which is a bearish reversal pattern, you could say that this is a spinning top candle. There is a wick on the top, wick in the bottom, and at a very, very narrow body, almost like a doji. The open and the end of the week are at about the same level. So we got to watch. We got to watch how it prints that candle for the week. But right now, this looks like a reversal candle, potentially setting us for some downside for the next few weeks. But if that that was just a sometimes these signals do turn out to be false indicators. If we continue and take out the high was 123,000 for this previous week that's about to end today, then we could potentially continue the climb up to 150s, was I was saying. But right now, that's the signal. The weekly candle is printing a bearish spinning top candle. Now, if you look at a longer term chart, the monthly chart, every candle here is a month of trading for Bitcoin. If you look at the previous peaks in 2017, then the peak that we got in 2021, and then the most recent peaks, if you join the peaks, there is a sharper trend line, a sharper slope trend line from that 17,000 or the 19,000 level from 2017, joining to 64,900 towards the April or so of 2021. And then most recently, that 123,000 peak, it tested that trend line. So that joining the peaks, we've just tested the trend line. So you could say technically we have tested from a trend line perspective the top of the trend line, and maybe we could pull back. There's a possibility if the bears will point to that. On the other hand, there's a slightly shallower slope trend line from that same peak at 19,800. If you join the previous highs, and these are the tips of the candles, as you can see, towards later in 2021 peaks, they join right at the top of those peaks on the candles. Then the same thing here, these are the shadows of the candles, or as in the wicks. We can see that in 2024, those peaks were joined, and more recently, the 112,000 that we touched in May. All those are the trend line that are right below from the sharper trend line. So both those two and the fact that there is negative divergence on this long-term monthly chart. The RSI was so much more stronger in 2017-18 climb, slightly at a lower high in the 2021 peak, and now as we are setting up the next peak in the 2025 timeframe, RSI is significantly lower. So that's another thing bears would point to, that look, this is a negative divergence in the very long-term chart, and potentially if it is been a nice parabolic climb, if we do look at how far we are from the rising 50-month moving average, you're looking at the rising 50-month moving average in the 50,000 level, and we are trading right now closer to the 119,000 level, 118,683, so about closer to the 119. So we've significantly deviated and from that 50-month climbing 50-month moving average, and hence once in a while we do get a correction, we do get a pullback. Bears would say that look, it has tested the top of that trend line joining the peaks, and perhaps we could get a pullback. And if they corroborate with the weekly spinning top candle, they could say, well, perhaps we have seen a peak for the next few weeks, 2 months on the Bitcoin. We'll see. We do think that this inverse head and shoulder is very much a possibility. We do think that There is momentum on the side of the bulls on Bitcoin. There is tremendous interest with institutional investors investing on Bitcoin. So are central governments picking up Bitcoin. We think that the 150 looks very likely. So that's where we think the momentum is. But we feel that if there is a pullback and we do get a test of the rising 50-day moving average at 109,000, that would be a tremendous buying opportunity. There are many ETFs in Bitcoin, such as Grayscale, GBTC, or like Fidelity's FBTC or IBIT and so on. Those could be the ones you could consider. And for the aggressive traders, there's a 2x leveraged Bitcoin ETF called BITX that does pay monthly dividend, and that could be a good consideration, assuming we do get that pullback to test that rising 50-day moving average. Now, I said I'm going to talk about Tom Lee's favorite crypto called Ethereum. He feels that the blockchain for Ethereum is very popular. It's a blockchain that many institutional sites are using. For example, for stablecoins transactions are managed using Ethereum's blockchain. It's a superior technology. So he's been bullish on Ethereum while Mike Saylor, the founder of MicroStrategy, or which is now called Strategy, has been hugely bullish on Bitcoin, making predictions of 1.5 to 2 million and higher over the next 5 to 10 years. Tom Lee has been very bullish on Ethereum. And if you look at the Ethereum ETF, ETH, this is a beautiful cup and handle. So here from the 26.7 on the left of the cup, it came down towards 13.69, then it went to 27.14 towards the June timeframe. Now that's a beautiful cup. A shallow pullback from there to 20, forming the handle, and then the breakout. That breakout measures to 40, over $40. And right now we ended near the 33 level on Friday. So we are going to see if this cup and handle target, we think it's very likely. One way to play it is just to buy this ETF, ETH, and for this aggressive, just like MicroStrategy stock is kind of geared to play a leverage play on Bitcoin. Tom Lee stock, which is called Bitminer, BMNR, is a way to play the Ethereum play. So if you're looking at playing the bullish run on Ethereum, it's of course overbought. RSI is at closer to 79.80. We can see a pretty strong RSI overbought, but look at the volume. This indicates strong momentum and strong interest from investors buying this breakout. So this strong volume, MACD climbing a higher high, RSI climbing a higher, all good bullish indicators that there's a very good likelihood that Ethereum, ETF, ETH is going to climb to 40. So if you do get a pullback, and say we get lucky and we get a pullback to test the top end of this cup, of the brim of the cup at 27, that would be one great opportunity for Ethereum to play towards the 40. So the key play is if Bitcoin pulls back to 109, great time to invest into some of the Bitcoin ETFs. And if Ethereum pulls back towards its 27, 28 level, that could be a great place. You can see the bullish cross setup. The 50-day moving average is climbing and about to have a bullish golden cross above the 200-day moving average. That's also a bullish sign. I'm going to now talk about the broader market, talk about the treasury, which we know is where smart money trades, and in particular the 10-year yield. We know that there's been a lot of news about what's going to happen to US has a ton of debt. We just passed the big beautiful bill. They need to now be issuing a lot of bonds to start paying for this deficit spending. So now, when these treasury bonds are floated, the 10-year yield in the chart itself is showing an inverse head and shoulder pattern with a potential to break above the level towards the 4.66, which in the past has been tested in the February timeframe before the market collapsed. There, we can see that it was at 4.66. This measured target on the inverse head and shoulder is also 4.66. We did cross above that neckline last week, tested a key level of resistance at 4.5. We tested 44.93 and pulled back and closed right at the neckline. We can see that it closed right near 4.43. That's where that neckline is. So we got to see what happens next week. In about little more than a week, on the 30th, we have FOMC's decision. We know Chair Powell has been on the gun with President Trump. There's significant pressure on him to resign. There's been claims that the renovation that's going on the Federal Reserve's headquarter building in Washington, D.C. is costing several, like $2 or $3 billion. There's been claims that he has misrepresented the spending on that when in his previous testimonies and so on. I think those are more of excuses to try and get rid of Chair Powell, to force him to resign. That will be a market moving event for sure. If he does resign, or is forced to resign, or is fired, you can expect the 10-year yield to break a lot higher. I don't expect even it to stop at 4.66. If any, from 3.6 to 4.8, that's, if you look at a longer term chart, that's a 120 basis point move. 120 to 4.8, 120 basis points to 4.8, or 1.2 to 4.8 takes us to 6%. I wouldn't be surprised to see a rapid, sharp climb of 10-year yield to 6%. That would mean a market shakeout. Market would not like the 10-year yield sharply climbing that level. And that could also mean, for those that are TLT lovers, a great time to buy TLT if we do get a 6% on 10-year yield. Because from there, we do feel that there's going to be rate cuts down the line. There's going to be, of course, a tremendous amount of fiscal discipline. They're going to try to bring some of that in. There's going to be many expect strong growth on the US economy, and all of that could help bring the yields back lower. So if we do get, and government is going to step in and start probably buying treasuries to bring yields down. So there's a possibility that could also happen. Call it the QE, quantitative easing, could begin again. So if you do get a breakout above the 4.8 of 10-year yield to 6%, that could be one heck of a time to buy TLT for the longer term. Now, broader sentiment, look at CNN Fear and Greed Index. That's printing extreme fear. Extreme greed near 75. Extreme fear is anywhere in the single digits. It was printing single digits not too far back, 3 months ago in early April. It was in the single digits around, 6 or 7, and from there it's now presenting as extreme greed. Look at some of the key indicators. One key indicator we look at is the bullish percent index of S&P 500. This is measured by, there are 500 stocks in S&P 500. What percent of the stocks are showing us bullish point and figure charts? Point and figure charts is one form of technical analysis where people use those chart patterns to spot out what are bullish looking point and figure charts. That number peaked out at 76 in that May timeframe. It recently came up 76.4 to a lower high at 76. And last week, while the market was climbing higher highs, look at where the bullish percent index did. It started coming lower. In the past, whenever you see seeing markets sell off, like in the February timeframe to the April, you said that bullish percent index had actually peaked out a few months before. This is kind of how market breadth or market's overall strength gets weakened as the market tops out. So from a level closer to above 80 that we saw in late September until October, it kept printing lower highs to the point where right before the February collapse, it was from 58, came down to the level of 10. 10% of the S&P 500 stocks, or about 50 stocks, had bullish charts in them. And from there, 10, we came to 76. We printed a lower high. Another key pattern here is when the bullish percent index of S&P comes down, when the MACD of that has a bearish cross, as in you have the histogram going from above the zero line to below the zero line. And these are all these rectangle highlighted boxes in purple. So we notice whenever that bearish cross of the MACD histogram happens, look at volatility. VIX is on the bottom. It tends to have a climb. Look at volatility when that happens. So once it happened in May, then into June, as the MACD in this case tried to cross over, it could not. And then the MACD again dipped below the zero line, turning lower. Look at what VIX did. Recently, we got a bearish cross of the MACD. The MACD histogram has dipped below the zero line. The black signal line is crossed below the moving average line, the red line. So that bearish cross of the MACD on the bullish percent index indicates a possibility we could be seeing a volatility climb. We know that we had a volatility climb going into, this big part of the sell-off into from late March and so on. And there again, same thing. Look at the bearish cross of the bullish percent index MACD. A bearish cross happened, and as that bearish cross happened, look at how the volatility climbs. So we're expecting a volatility climb to come, and with that, we expect the market to pull back. Now, if you look at the New York Stock Exchange advanced decline line, that's another market breadth indicator. That recently, in July's first week, printed a higher high, But look at RSI, that printed a lower high. That's how a negative divergence sets up. And since then, it pulled back to form a lower low from the earlier low that we saw in the early part of July. So a lower low in the summation index cumulative breadth indicator indicates the market's breadth is weakening in terms of advance minus declines. We can see that this also has had a bearish cross of the MACD. The MACD histogram now has dipped below the zero line. And now for a few weeks, like we saw back in the April timeframe, in fact, from the February to the March, you see for several days at a time, the MACD printed levels below the zero center line. And we expect that to potentially start up. And this cumulative line of the advanced decline line to print lower lows. With that, we could start seeing the summation index, which is another signal of market strength. That's also from advanced decline line, but this one is more like a monotonic kind of an indicator. It's a cumulative measurement as well, but when it climbs for several weeks. This is a weekly chart of that. Each candle is a week of the summation index. When it climbs for 8 to 10 to 12 weeks in one shot, and then it starts a decline. So the most recent climb started in early April when the market bottomed from minus 590. It has now recently tested 937, and last week it finally printed a lower candle, a red candle. So if this momentum on the summation index starts declining, that could mean market's breadth deteriorating, and it could mean market coming down. If you look at S&P 500, it has formed a neckline joining the previous peaks from December at 6,099 to 6128 at around late January into 6147 in February. And most recently, it crossed above that. We can see that it crossed above that, but has not gone too far up as it printed slightly higher highs above that trend line joining the peaks. RSI is printing negative divergence. That's how near-term pullbacks are are signaled. So here, this negative divergence in RSI at a lower high, MACD kind of hovering at that trend line could mean we could get a right shoulder pullback, a pullback of the S&P to test its 200-day moving average, which right now is at 58.71, is a possibility, form a right shoulder, and then a nice inverse head and shoulder breakout. If you do get the right shoulder, that breakout, by the way, measures to 7,600 or even higher. So it could be a very bullish break, and maybe that's the melt up that many out there. There's a guy called David Hunter. If you just Google him up on CNBC, he's been calling for an 8,000 plus S&P 500, but then a big market crash after that. So maybe if that melt up prediction that many are making happens to pan out, this could be after this right shoulder pullback, and from there, a big bullish move breakout higher. That's a possibility if rates are cut, by the way. The way this could all correlate to if you start seeing aggressive rate cuts coming in, and maybe if the Fed chief is replaced and the new Fed chief is dovish and starts accommodating President Trump's requirements to just slash interest rates lower rates are always very bullish usually for the market loves low rates, and then if you add quantitative easing on top, it could effectively entice the bulls to with animal spirits to start making that big bullish breakout in stock. So that's a possibility, and that happened in the 90s, by the way. If you looked at that pullback we got during the Persian Gulf War in 1990, that measured pullback was identical to what we got in the 2025 from February to April 7th bottom. Identical. 21.6% was the move then, and the same 21.6% move down this time. Their interest rates was drastically cut from 9% down towards 3%, 600 basis points of cut. I'm not saying we're going to get that much, but from 4.25, if we get even 200 basis points of cuts, 25 or 50 basis points at a time for the next several meetings, bringing down the interest rates or the Fed funds rate from 4.25 down towards the 2% could be very market positive. And that could be the scenario causing this massive melt up move. That's a possibility, but all said and done, near term, this is looking like a market extremely stretched, very bullish euphoria, and time for a pullback. One of the indicators of euphoria is this ETF called BUZZ. It's a positive buzz out there from positive investor sentiments. This is a beautiful cup and handle. From there, the breakout, the measured target is near 35.9. And where we were at on Friday or last week was near 32.8, about $3 more to climb. But that's a very overbought RSI above 81. We can see MACD is climbing higher highs. But look at the heavy volume. Friday's was options expiration for the month of July. Options expiration tends to see a heavy volume, and we got a slightly down day, not a big drop, minus 0.15%, but in the possibility of the top not being too far on this cup and handle, we got to watch out. Let's look at the top three holdings of that BUZZ ETF. It's a VanEck BUZZ, positive BUZZ ETF. And we can see a beautiful cup and handle on this space company called Rocket Lab. Huge beneficiaries of defense spending, commercial flight launches, and so on. We know that the aerospace industry has been extremely hot. This is a classic cup and handle with the left part of the cup at 33.3, the right hand of the brim of the cup at 32.7, and the bottom of the cup at 14.7. So 14.7 to a 32.7, you're talking about $18. Add 18 to 32, it measures to 50. So that's the 50.69, 50.7 target. It already exceeded it. It exceeded it, tested 53, and then look at this pullback, leaving a top wick on the top and the body being lower than that. That is in some ways the shooting star. Shooting star usually has a shorter body, but the fact that left a week, that's a bearish reversal candle. And the next week, which is the week that we just ended, another this is no, these are last 2 days of trades. This is daily. Each week is a day. So last couple of days on Thursday and Friday, two bearish reversal candles. We can see that this is also an extremely overbought RSI at 86. This is setting up Rocket Lab. Stay away. The bulls who are on Rocket Lab, stay away. I think this is closing to a major top forming and it having a sharp pullback is what we expect. So that bullish euphoric stocks that have gone up parabolic, when they pull back, are often indications of a market changing direction and having a correction. And looking at this very parabolic climb in Rocket Lab tells us that there is a possibility of a sharp pullback coming. Same thing with the AST Space Mobile. Look at that one. This is, instead of a cup and handle, has a W-shaped double bottom. It tested that 17.5 at 18.2 around the 18 level. Two double bottom tests. As it tested the double bottom, it had a nice RSI that did not go into weaker RSI. RSI kind of stayed at the same level. Break up massively, break out to a target of 53.48. It exceeded that at 54, pulled back sharply to 42, and then printed a higher high. But in that higher high towards 58, look at the RSI. Beautiful negative divergence. This is how bearish reversals happen. So we are expecting same thing with MACD, a lower high in MACD, a lower high in RSI. This is also a topping pattern. We feel that there's a very strong chance we see a sharp pullback in Rocket Labs, AST Mobile. And finally, we can look at the AI darling stock, Palantir, big time in the news, massive spending by Fortune 500 companies and the US federal defense sector. They use Palantir technology in a lot of the military intelligence. And in here, you can see that this is a beautiful cup and handle with the brim at 125 and the bottom of the cup at 66. So 66 to 125, you're talking about $59 as the depth of that cup. Add the 59 to the 125, that takes it to 184. It didn't quite get to the target yet. It's been climbing higher highs, tested 155, talking about a 30 point or so from that 155 to 184. But this is also, look at the RSI. Much lower highs in RSI as this is climbing higher highs. Much lower highs in MACD as it's climbing higher highs. Negative divergence at its best. Be very cautious about Palantir. It's not going to go to the moon. I know Jim Cramer has been talking about 200. There are many in Wall Street put a 200 target. I'm not sure it'll get to the 200. Sometimes it overshoots the target, as you saw in the other two stocks. The target is 184. It could overshoot, just test the 200 briefly because of the Wall Street guys all pegging their target there. But that said, Palantir, I would be very cautious looking at the negative divergence, looking for a sharp pullback. So as we go into July, perhaps the bulls may stick it out and maybe keep the market floating a little higher because of all the momentum. But into August, I do see a correction. I do see a pullback shaping up, at least 10 to 12% kind of a correction, S&P 500. So summing it up, if you look at the S&P 500, there's a possibility that that S&P 500 pull back to its rising 200-day moving average towards 5,900 to now right near 6,300. You're talking about 400 points or so in S&P is a possibility that we could see that. Looking at crypto, we can feel that bears would say that this reversal candle on Bitcoin, this weekly candle, this reversal is a shooting star kind of a candle. Could mean we could see a near-term pullback in Bitcoin. And the pullback is a possibility looking at the fact that either it holds a strong support at that rising trend line of the peaks somewhere around 113,000, or maybe a slightly deeper. If you take 115 to 123, 8,000, subtract that from 115, you could get something around like 107, 108,000 kind of a test of the like the 50-day moving average. So that's a possibility on Bitcoin. Ethereum, the ETF, ETH has beautiful upside, beautiful cup and handle, strong volume momentum. If you get a pullback on this towards the 27, 28, would be a amazing buying opportunity. You're likely going to see that pullback in low volume, and then from there a move up to 40 would be a beautiful play. Fear and index shows extreme, greed at 75. Be careful out there. Bullish percent index is showing a MACD bearish cross. Expect a volatility climb coming. And so is the advanced decline line showing negative divergence, lower low from the earlier in July, indicating that a market pullback comes as the um, breadth of the market deteriorates, as in the advanced decline drops. The summation index is also kind of usually peaks at 1100. Potentially another week or so it could climb and peak out, but from that 1100 we expect the summation index to decline, and that would indicate markets overall momentum and markets overall breadth to deteriorate. So with that, good luck investing. We are just cautioning that even if the momentum stays for another few days, there is a pullback expected. Be ready to play that. Looking at the BUZZ, the ETF that is almost near its target. Looking at these very parabolic stocks, be extremely careful chasing any of these parabolic stocks with the Rocket Lab, AST, Space Mobile, or Palantir, and there are a few others in this game like Hood, Robinhood, and others. Just be cautious of those. Get a pullback, get a decent pullback, and then perhaps look at investing if you want to play those high momentum, these positive buzz sentiment stocks. With that, good luck investing. We'll talk to you next week. Thank you.